Countrywide Connect with Andy Thompson and Sarah Perriam-Lamp.
In the meantime, we had some news from Fonterra a week or so ago that they have dropped their projected payout for their farm milk payout by 50 cents to 9.25 for the 2026-2027 season, which is slightly concerning, particularly with the costs of production going up significantly. There is a real squeeze on that. And with our good friend Donald Trump deciding that he's sick of peace and he wants to have another war, I got bored with peace, so he's going to have a war. So goodness knows what's going to happen to fuel prices. Joining us right now is Cristina Alvarado, head of Dairy Insights at the NZX. Cristina, welcome. Thanks for your time. Welcome back to the show.
Hi, Andy. Thanks so much for having me. It's always great to chat with you.
Our very favourite analyst on this one. Unfortunately, the news isn't great. I think last time we talked, we'd had a GDT auction and things were looking not too bad. But the last one, when we had that I think it was 4.2, I think last week, dropped 4.2% or 4.9%, I think. Did that directly influence this drop, do you think, Cristina, or do you think it was on the cards anyway?
It probably made the last drop to fill the cup because we've seen in the market that prices have been going down. There's been enough production coming from all the key exporting countries in the latest month. So up to what has been reported, which is May production, we're gonna start to get June production probably from next week. But we've seen that, US has had 3.2%, Europe also they haven't reported May, but in April they had 2.3%, US 3.2, sorry, switch around. And then you've got Uruguay 10.2%, Argentina still over 2%, Australia 5.4%. And the only country that has actually seen a decrease in production, it's an importing country, which is China. And they did report a drop of 4.6% for May, which could turn this the other way around later on. If they still reporting drop, they will have to come back probably a bit harder in the market and buy, although they have been building stocks. And yes, it was expected to see the price to come down. And it's not that it's been fully down, it's the midpoint, because the range is still quite wide. The range is still between 8 and 10.50. So even though right now it's not looking that good with that drop, the market can always change and there's still room for it to go up. And the season is just starting. So we do know that there is the threat of El Nino hitting not only New Zealand, but also other key exporting countries. So if it does come into reality, the consequences of having a big El Nino this year, that's definitely going to impact production for many countries. So that and market keeps changing. We never knew last year that we were going to have a conflict in the world, such as the one with Iran that did everything that it did to oil prices and all the consequences that brought. And again, if that finishes to get resolved, hopefully costs of certain things go down again, then that could also help farmers if we do see some costs go down, like fertilizers and feed.
So, Cristina, it's well known that particularly in America, and some of these countries can turn up production very quickly when prices are high. They can also turn it down very quickly when prices are low. But the other factor in that is obviously their cost of feed productions. We're a pasture-based system, so our cost of feed doesn't alter a heck of a lot, but it does for them. So grain prices go through the roof, then they it gets expensive for them to produce milk, right? So how much of it was the fact that the price was so high that they started to chase that price?
Do you mean the feed price?
No, sorry, I mean the milk price. So the milk price was high, so these other countries ramp up production to take the benefit of it. That's why we've got the glut.
Yes. Well, in part from the US it is, but when you look at it overall, weather has been quite good in most of the producing regions. And then, of course, you have a good pay for milk products. And the whole need of protein has also caused that push for producing powders and all the products that can go into protein. And in the US, they built new cheese factories that were open about a year and a half ago, nearly 2 years now. And they require a lot of milk to go into those new factories for cheese producing, because their exports have been growing significantly for them, and they need that flow. And up to Q1 of this year, they were not at full capacity because they didn't have enough milk to fill those plants. So there's been a combination of a need for, then again, we haven't seen as many disease like we saw early last year with the bird flu and also in Europe. And it's been a combination of all of that. So that's
Yeah.
definitely put more production and pressure on the prices.
Okay, so that's the supply side. What about demand? What's the demand been like? And you said the Americans are jumping into cheese production. Is the demand still there? Because we've seen in the past when prices rise, consumers reduce demand, but then they also switch to alternate products. Are we seeing that?
Not really. I mean, there's definitely been good demand. If you take into account how much production has gone up, demand has sort of grown, but not at the same pace as the production. So there is demand. The only shift that it's been evident that we've seen is that a lot of the countries that buy a lot have been not building much stocks, but more buying what they need, a sort of hand to mouth situation there, just trying to get what they need at the moment. And especially when all the cost of shipments, freight, and all that started to get quite high, they were holding to buy. And we can see that to start to shift a little bit as oil prices keep going down and stabilize at least, because there is always a need for dairy products. And now with that push of countries trying to get protein, there's definitely demand. It hasn't kept at the same percentage of growth as production, but there is demand.
Okay. Have you done any modelling at NZX? Have you done any modelling on the El Nino, what that might look like, particularly through the futures? Like it is, they're talking about a super El Nino, a very strong one. We know it's going to impact into a lot of dairy producing regions. Are we starting to model that, or is it too early?
It's a bit early. We do model up to 3 months in advance, and we factor that in our pasture growth index as well and our milk production predictions. But because it's too far ahead, forecast, the longer they get, the less accurate they are. And El Nino is supposed to be hitting after October, right? So we're at that still 3 month. We'll start probably from next month, start to get closer into that forecasting.
What about the futures? And I never understand the futures. What are they looking like for the next 2 or 3 months?
Well, they've actually, the drop has been slowing down a bit, and the closing price for the 27 contract last night, if I'm not wrong, it finished at 938 or something like that. So it hasn't kept dropping. It actually went up slightly, which is good. That means, there's always room for the price to go up. And even our own milk price calculator, it's sitting at 941. When we revise our forecast after every GDT event, so we did a revision on Thursday last week,
Hmm.
and it actually, even though GDT went down significantly, the price went up because of the weaker New Zealand dollar. So before that, it was sitting at 938, but now it's sitting at 941.
It's It's interesting you say that. Okay, and I don't think we pay as much attention to the New Zealand dollar and its impact on this. We tend to look at the GDT in its, I suppose, singularity, but the dollar makes a huge difference as well, doesn't it? I remember back in the day, every 10 cents it goes up, sorry, every cent it goes up and down is 10 cents in payout, was a rule of thumb.
Well, yes, it's around that because it does have, I mean, we get paid in US dollars, right? And the weaker the New Zealand dollar is, then the more New Zealand dollars we get per one US dollar that we receive. So if it sounds a bit counter intuitive that our own currency, if it goes down, our price goes up, but that's the way it works. It's because we sell our product overseas and we get paid in US dollars.
It works the other way round though when we want to buy fuel or fertilizer or any of the
Yes,
products that we
exactly.
import. So I was going to say it balances itself out, but I'm never quite sure it does, to be honest.
Yes, I haven't done the math on that. Yeah, and that's actually
Yeah,
a good one.
exactly. So farm input prices, do you model them as well?
Yeah, we normally work with the dairy and set estimates, break even and cost prices. So yeah, the one we're working with is the latest revision they did for the 27th season, which is $8.79, if I'm correct.
So it's getting close, isn't it? As I said, like it doesn't like that's what worries me about an estimate like the range of Fonterra. And I was talking to someone earlier in the week, and I said, it can be too. The lower level's got an 8, which is terrifying, basically.
Yes, it is, but hopefully we won't get there. And as well, I think when the revision was done, fertilizer prices were quite high, and hopefully we'll see those drop. And the good thing is that with the good money that came for last season, we know a lot of farmers have wisely used it to pay debt,
Yep.
which does make a big amount for that cost.
Yeah,
So,
exactly.
yeah.
All right. Hey, Cristina, we have to go. Thank you so much for your time and coming on Countrywide Connect today. I really do appreciate it. We'll talk again next week. There's GDT next week, so we'll catch up next week and discuss.
Thanks so much, Andy.
Yeah. All right. That is Cristina Alvarado there. She is the head of Dairy Insights for the NZX.
Countrywide Connect with Andy Thompson and Sarah Perriam-Lamp.